The world is captivated by artificial intelligence, with headlines screaming about its transformative potential every single day. We are witnessing an unprecedented surge of investment and excitement, reminiscent of past technological revolutions. This current wave feels different, however, as AI promises to reshape industries and fundamentally alter how we live and work. The sheer scale of capital pouring into AI ventures is truly staggering, creating a buzz that few can ignore. Billions of dollars are being funneled into AI startups and established tech giants alike, driving valuations to astronomical levels. Companies that were once niche players are now commanding market caps previously reserved for titans of industry. Investors, both institutional and individual, are rushing to stake their claim in what many believe is the next great frontier. This intense capital inflow is accelerating innovation, but also inflating expectations beyond current realities. Many observers can't help but draw parallels to the infamous dot-com bubble of the late 1990s. Back then, any company with .com in its name saw its stock price soar, often regardless of its business model or profitability. The internet was undoubtedly revolutionary, yet the market overcorrected dramatically when the hype eventually crashed. This historical context provides a crucial lens through which to view today's AI frenzy. Several factors are fueling this AI enthusiasm, including genuine breakthroughs in machine learning and computational power. However, speculation, fear of missing out, and a herd mentality are equally potent drivers. Everyone wants to be part of the next big thing, leading to less scrutiny of business fundamentals and more focus on potential future returns. This combination of real progress and market psychology creates a fertile ground for inflated assets. Big tech companies are playing a central role in amplifying the AI bubble, pouring vast resources into research and development. Their aggressive acquisitions of smaller AI firms further consolidate power and create an impression of unstoppable progress. These giants are strategically positioning themselves to dominate the AI landscape, influencing market perception and investor confidence significantly. Their massive marketing campaigns also contribute to the widespread belief in AI's immediate impact. The primary concern for many financial analysts is the pervasive overvaluation across the AI sector. Companies with minimal revenue or even negative profits are being valued at billions based purely on speculative future growth. This detachment from traditional financial metrics signals a market driven more by narrative than by proven performance. Such high valuations make these companies extremely vulnerable to market corrections. A significant portion of AI startups, despite their innovative technology, struggle to translate their advancements into sustainable profits. Developing and deploying sophisticated AI models requires immense computational resources and highly skilled talent, both of which are incredibly expensive. The path to monetization often remains unclear, relying heavily on future breakthroughs or market adoption that may not materialize as quickly as anticipated. This underlying weakness is often overlooked amid the excitement. The impact of AI is indeed broad, touching almost every industry from healthcare to finance to manufacturing. While AI promises increased efficiency and new opportunities, the immediate benefits are often overstated or take longer to realize. Many companies are investing heavily in AI solutions without a clear strategy for integration or a definitive return on investment. This widespread adoption, driven by competitive pressure, sometimes lacks genuine strategic foresight. Navigating this landscape requires a keen eye to distinguish between truly transformative AI innovation and mere hype. Genuine breakthroughs often address specific problems with demonstrable effectiveness and a clear path to value creation. Conversely, many ventures capitalize on the AI buzzword without offering substantial unique advantages or scalable solutions. Investors must perform rigorous due diligence to avoid falling for speculative ventures. The AI bubble shares characteristics with other historical speculative frenzies, such as the housing bubble of the mid-2000s or the more recent crypto boom. In each case, asset prices decoupled from intrinsic value, fueled by optimistic projections and easy money. While the underlying technologies or assets might have had merit, the market enthusiasm pushed valuations into unsustainable territory. Understanding these patterns helps contextualize the current situation. In every gold rush, the real money was often made by selling picks and shovels, Not by finding gold directly. Today, companies providing the foundational infrastructure for AI, like chip manufacturers, cloud computing services, and data providers, are seeing immense growth. These pick-and-shovel providers often offer a more stable investment than highly speculative AI application companies. Their essential role makes them less susceptible to the wildest swings of the bubble. As with all bubbles, there are several potential future scenarios for the AI market. A slow, gradual deflating could occur as investors demand profitability and real-world impact. Alternatively, a sharp correction might happen if a major economic downturn or significant technological setback erodes confidence. However, even after a bust, the underlying technology typically continues to evolve and mature, eventually finding its true value. The key is separating the enduring innovation from the fleeting speculation for individual and institutional investors alike. Caution and thorough due diligence are paramount during this period. Blindly chasing the latest AI trend without understanding the underlying business models carries significant risk. Diversifying portfolios and investing in companies with clear revenue streams and strong management teams can mitigate potential losses. A critical and discerning approach is essential for navigating this volatile environment. Despite the bubble concerns, the long-term potential of artificial intelligence remains undeniable and genuinely transformative. AI will continue to advance, creating new efficiencies, solving complex problems, and opening up entirely new industries. The current market exuberance might lead to short-term pain, but the fundamental progress in AI research and development is real and ongoing. Investors who maintain a long-term perspective might still find significant opportunities. Ultimately, the question isn't whether AI is powerful or revolutionary, but whether its current market valuation is sustainable. The AI bubble is indeed bigger than many realize, fueled by a potent mix of legitimate innovation and speculative fervor. As history repeatedly shows, unchecked enthusiasm eventually meets economic reality, making informed decisions crucial for everyone involved. We stand at a pivotal moment, watching a technology with immense promise navigate the volatile currents of market sentiment.